Hello, my name is Steve Bigelow with the Candlestick Forum. The market is still in a downtrend, and that's easily identified by the fact that even though we're starting to see some buy signals, as we saw on a big bullish harami on Thursday, right at the 200-day moving average on the Dow, and it's kind of doing it in the same level the market's bottomed out before. We don't have an uptrend until they can get back up above the T-line. So just because one index might be showing a little bit of strength, if the other indexes aren't, we have to assume the downtrend is still in progress. Now, again, this is all related to the identification of what's going on in investor sentiment. And investor sentiment, obviously, right now is bearish. Even though we're getting toward the oversold area, the NASDAQ did not have the strength to support at the 50. We have to assume, even though it might be bottoming, there's still a lot of stocks that are going to be sold off. So remember the T-line truism, that if you see a candlestick sell signal and a close below the T-line, the probabilities are extremely high that you're going to be in a downtrend. Now, there are some strong sectors that are starting to show up. For example, the transportation stocks are starting to show a little bit of strength. Star Bulk doing kind of a bobble breakout. This one can be bought. And there's other transportation stocks like Yellow Freight and FedEx, a few others that are starting to show strength. And some food stocks are starting to show a little bit of strength. Maybe on the fear that everybody's going to start having to hoard food again if there's going to be another lockdown, which I don't think will happen, but it doesn't matter what I think. It's what investor sentiment thinks. Now, the important aspect is you probably don't want to be buying too aggressively unless there's a lot of confirmation that the markets aren't going to continue to sell off. The selling off is very easy to identify. This is what we call observe the obvious. If they could not get up through the 50 on a stock like Bison, and you're in a downtrend, and then every time you come up to that resistance level, you see a sell signal and a close below the T-line, and the market indexes are starting to get a little bit soft, this again puts the probabilities in your favor that you're probably heading in a downward direction. Now, another element for analyzing what the overall market trend is doing is when you can do very simple scans using candlestick techniques, and you're finding a heck of a lot more bearish signals that look good versus bullish. That's another indication that the just the quantitative assessment of most investors is that they want to be selling things off versus buying at this point. So anytime we can see where you can add up everything that tells us this is a bearish situation, a bearish engulfing signal right at the 50-day moving average, closing back below the T-line, stochastics rolling over, and you're already on a downtrend, that's a good indication that you could be shorting on any weakness from here. So we look for positions like Aloe. Look at your bearish engulfing signal right smack dab at the 50. Now remember, the 50 is on everybody's chart. So they're watching to see what happens at this level. If they see a failure at the 50, lots of investor sentiment will be, well, it's failed, let's get out. That starts the next move to the downside. So this is not rocket science. When you start seeing selling in a downtrend, big bearish engulfing, left right combo, close below the T-line, and then they cannot get back up above the T-line. Now remember, the T-line is something that people do not have on their charts. Using it with candlestick analysis just dramatically improves the probabilities of being able to assess which direction prices are going. So as we can see on Friday, Bidu had a bearish best friend to the downside. What can we imply from that? Wave 1, wave 2, wave 3 is starting with a lot of force to the downside. So using the T-line is a very effective method for telling you when the next waves are starting, like in Mara. Wave 1, wave 2 supported right here at the 50. Wave 3 was the evidence of a shooting star type signal that told you they weren't going to close up above the T-line. Thursday, they sold it off some more, closing below the T-line, below the 50. And when it opened lower on Friday, you could be shorting immediately because what's our expectation? First target, second target. Again, human nature works the same way time after time. All we have to do is identify the signals and patterns, which is what candlestick analysis does, that puts you in the right positions with a high degree of probability. So right now, as long as we do not see bullish strength closing up above the T-line, just assume that the downtrend is in progress. Any buying at this point should be done with the idea that if it doesn't confirm by the end of the day or in the next couple of days, close it out. The downtrend of the overall market is putting too much pressure to be buying at this point. That'll be it. We'll see you in the chat rooms.